Okay, thanks everybody for allowing me to be a little late today. We went to the pumpkin patch, got pumpkins, fed donkeys and cows, and all kinds of stuff. Rode the hayride. My allergies are killing me. I got all kind of dust and soot all in my lungs, so God only knows. But it was fun to take the little one there to the her little school went. Oh, and y'all remember? I didn't know this too. You remember the guy I got in a fight with over the mailbox? My neighbor had no idea his wife rode on the hayride with me in bed, and I didn't even know it. So kind of cool. So I did not get knifed or cut or anything. So yeah, someone asked me today, Bobby, how come you just can't live in peace with your fellow neighbors? And I go, it's peace is overrated. Right? I'm a fighter, not a lover. A lot of times, I can remember when Beth and I were dating. It was our second date, and we were in McDonald's because I like to treat the ladies classy. Y'all understand what I'm saying? It was probably during the time that they were having McRib sandwiches, and Beth was wearing these white little shorts. Oh, they were cute. Her legs, she'd been going tanny bed. She had cute legs and everything. And so there was this group of 4 guys in there that started looking Beth up and down, violating her with their eyes. And I said, fellas, I looked at him and I shook my finger at him. And here's what that son of a gun did, right? He was with his 4 friends. He goes, 1, he pointed to himself, then he pointed to his friend 2, and he goes 3, and he goes 4. And then he pointed at me, he said 1. And I said, by God, it's going to take all 4 of you too, because I'm about to whoop your asses. Right there in the middle of McDonald's. And guess what? They backed off. I always call a bully's bluff, right? So I was about to go to town and fight me up some arse right there in the old McDonald's. That was a long time ago. All right, so welcome in everybody. Hope you're having a great day. We've got Mitch. How about that? Enrico, Wayne, MRP. We got Ken. We've got Jose, Rod, and Gas. I like it. This is. Says it's Dwayne though. That's Dwayne too. No, it's Dwayne above him. Okay. And Rod's kicking it with the sweet butts, baby. He's kicking it in his 401k. That's awesome. That's really awesome. So Rod, I think, has his hedges in another account, right where he's hedging it, because you can't really do the options, all the stuff that we do in another account. But you can kind of hedge it in another account. Make sure you put your hedges on. So if I had a 401k where I was running that thing, man, I'd be running my AIM, letting AIM tell me when to buy and sell, and then I would be, just letting it run its thing. I was thinking today, this must be broke. Surely it's giving me a signal to buy something, but it's not, because I forgot I went in on the 22nd and I bought additional shares. So when I bought additional shares of Tqqq, I had to put yes here, right? It was new capital, new underline. And when I did that, that made my safe go up by 50% of the stock that I bought. If you hadn't read the book yet, you're probably like, what the crap's he talking about? I got it. How to Make $1 million in the Stock Market Automatically. It ought to be on your reading list. Got to be reading it. The cool thing is you can get it on, if you order the book, it's kind of expensive, right? If you can find it, but you can get it on Kindle for, next to nothing, probably a few bucks. It's a great book. And it'll tell you what we're doing here with our strategy of sweet butts. Sweet butt sounds like we're in a barbecue competition, having the Sweet Baby Ray's butt competition. I don't know, but we call it sweet butts. All right, so where are we going? Let's see what the old account's looking like today. Okay, Marquette, the AD line, advancers and decliners, is nothing. It's, I don't give it there. It's 25. So less than yesterday. So it's kind of a blah, kind of a boring kind of day, right? And that's what the AD is telling us. Kind of neat that where's our support at on price? We got a pivot point down here at 45.50. What else we got to catch a falling knife, so we can kind of get some idea of what we're going to do the rest of the day. So this little purplish pink line is the overnight low, and you see how that worked as support right quite well, right? Then you see the hourly mid band, which is this little turquoise line. This little white line is the cash open. And this gray area is the 15-minute opening range, which was from 72 to 83, 11 points. We are below the VWAP. We're below hourly, the cash open, and we're below the blue line, which is the overnight high. So I always like to look at the overnight high and overnight low. So, I'm looking here. You see that we have much more resistance above than we do support below. We got one line below, two line below, but what do we got above? We got 1, 2, 3, 4, 5 lines above, right? So what does that tell me? Well, it tells me if I had to guess, we may be weak into the close today. We'll keep an eye on it. Keep an eye, see where it goes. The good thing with our strategies, we don't have to watch that closely. We're not day traders, but it's kind of nice to know, where the market's going. So, here we are testing this, which should be resistance a little bit coming back in here. That should be resistance. So we've got a few lines above, right? So if I had to guess, I would think last 30 minutes of the day may see a little bit of a sell-off. That's where I think we might go. All right. So the second thing that we do is we look at our awesome big green monster, and we will be drawing another big green monster next week, right? We're getting into it. So let's go to volume profile. And I look at this on a 30-minute, 10-day chart to see where we are. So we're above the 20, the 50, and the 200 moving averages. These two are simple. No, these two are exponential. This one's simple, right? We see the point of control for the E-minis down here close to the 50% line. So if we're going to see a pullback, I would expect to pull back, in the coming days, probably to be in here to fill these gaps of volume and to go where the volume has traded the most. Would not surprise me at all. Interestingly enough, you see we had a little bit of resistance at the 45.90 area, which is the value area high on the volume profile. And we are also, where's my dang pen? I paid $25 for this, and by God, I'm going to use it. Where's it at? Hey, where's my other little thing? My daughter cut my computer off yesterday, so yeah, I paid $25 for this too, so I'm going to use it too. Let me try this. So all of y'all know where the butt is, right? The butt is this 50% line. I draw the butt. This is fair value. This is where price is fairly valued. Currently, check this out. We are overbought. All right. So what is my assumption on overbought? Well, with overbought, look at there too, how the level just kind of, isn't that awesome? How the level just kind of, it's a little bit of support right there, right? It started bouncing off that line. Cool how that works on a line that we drew back on October the 1st. But this is fair value. This is oversold. So you know how this works. This is, it's better. I got a pen. I got all the tools, y'all. Just don't use them. This is overbought. This is the fair value zone down here. And then, it just repeats and repeats. So if I had to guess over the next couple of days, then I'm probably now a little more bearish than I was yesterday. Yesterday, what were we? We were kind of, neutral to slightly bearish. Market goes up today, crushes our dreams, of course. And so today, I'm expecting within the next few days, the price to come back down into here. All right. So it may or it may not. That was interesting. I wonder what that was. Okay. So let me delete all that. And then let's look at our next tool. Let's see what our screwdriver says. The screwdriver, we've got to put a lot of weight into that, right? So let's go to the skew. Hope this thing is working. So we got to go to 31 days, closest to 30. And these green ones tell us where the price is, right? So we'll go to 1126. Okay, give it time to populate and do its thing. So basically, we're wanting to say, where is the 20-point spread 41 away? See, there's 5.2, 41 away. That's our skew. So we go to our trend, and we know that today is the year of our Lord 10/26/21, 26/21, and I do believe it was 41. Well, look at there, y'all. We've got a little progression going. It was 43 the day before, then it was 42 and 41. So what is it doing? It's doing exactly what we thought it should do. So what did we think that it should do? between the green line and the red line, this is where the skew of SPX normally is. You and I track it to know when, it's at extreme values. This was extreme. So when it was here, you should have been bullish, 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 bullish. Now, what are you here? Well, you're still a little bullish with skew, right? We expect skew to go back into the 35 range. That would probably take one good up day, a couple good up days to get us back where it normally needs to be. Keep in mind, it's just projections, and this thing could easily go back to 96. We just don't know, but it really does normalize at some point. So I'm thinking normalization should occur, in the next few days, right? That's what we anticipate. So it's the best thing that we can do. And you who have been here sometime, you've seen this dang thing just work. I mean, it just does. It is our best club in the bag, so to speak. This darn thing just works really, really, really good. And I've been thinking about, turning this chart upside down so that, you can see, because this going down means market goes up. I don't know if I'll do that or not. So let's close this. We'll save it for today. So we know what we're doing. We don't have any triggers to do anything on our AIM program. Okay, feel good. So the next thing that you do is you go and you say, I'm gonna look at my forest, right? How's the forest doing? So the first thing I do is I like to see my deltas, SPY weighted. I'm 1.4. Y'all, I am neutral to the hilt. I am neutral, which is really good. Why? Because my assumption going forward is that I'm neutral to slightly bearish, even though the skew is neutral to slightly bullish. So overall, the green monster and the skew kind of crosses each other out and says, hey, Bob, you probably should be really kind of delta neutral right now. So even though I've got all these hedges that have the theta burn on it, whether Ron Bertino says they're fake negative theta or whatever, we don't know. All I know is I got good positive theta and I've got great vega. Now, for those of you saying, what the crap is this? Delta, thetas, vegas, and gammas, and all this kind of garbage? What is this? Well, you'll learn as you go on with us, if you're new, that of what deltas do and what thetas do and what vega do. Vega's where you get hurt on a down move. When the market goes down, short vega is bad, right? Because for every 1%, if I had negative 331, so for every 1% move in volatility, I'm going to lose $332. So what if volatility shoots up from, what is it now, 15 to 50? What's 15 to 50? That's 35, 30, 40, 35 points up, right? So you miss 35 times 331. That's how much you would lose on volatility. 35 percentage points times 331. If it went up to 50, you'd be losing $11,585. Ouch! That's why we put on hedges that help us with this. And our account's up $263 for the day. Hooray. So is there really anything for me to do? So let's think. It's an up day. What can I do in up days? Up days, I can add complete tranches of the Black Swan hedge. Up days, I can add to the VIX call, buying VIX calls that helps us with our hedges. And we put those in the 30, 60, 90, 120 days out, right? So we got the VIX hedge going, but I don't need it. I just don't need it. I don't really need to do anything. I've got great theta. I want my theta to burn so that I can make money each and every day. I've got great vega in case we have a downturn, and everything looks fine. So the one thing that I do look at every day is I like to go see, how does the fortress look? How does the fortress look? So I'll go hide simulations. I'll pull up ES, single symbol. I kind of like to see how my Black Swan hedge is looking. So here I'll go to the vol step. I'll go to 4 vol steps, and I move this to 15. Why 15? Because I know basically how volatility will hack on a 20% sudden down move. I want to test my portfolio. So this is a almost $50,000 account. And if my calculations or these calculations are correct, if we have a sudden move down and an increase of volatility to 60 to 75, which I think would be common if we were to make a 20% down move, then I'm going to be up between 78,000 and 115,000. You'll see this, right? going to be up that much. And then what if you say if it was a Corona crash? The Corona crash was down 35%, right? Let's just kind of model that, see what that looks like. So if I'm down 35%, then I'm going to be up, watch the numbers over here. If we have another Corona crash, I'm up 223,000 to 275,000. Ta-da! But wait a minute, Bobby, it says you're only up 83,000 here. That is correct. And it does not, this does not take into account the effects of volatility increasing. This is how I test my portfolios. So how am I good in my portfolio? Well, I think pretty darn good. Now, then I like to go not only know how my hedge is looking, but how is everything looking? So here I'm going to go hide simulations again, right? And now you go portfolio beta weight. So let's look at the whole stinking kaboom, right? So now if I'm down 35%, even though I've got, what, 80% of my account into Tqqs, then I'm going to be up 59,000 to 110,000. Do y'all see how sweet that is? So do I care if Tqqq drops, you know, an ungodly amount, 60% or 95%? No, I really don't, because I've got all kind of hedges down. And this is something that I would recommend that you do if you're running the Black Swan hedge. You probably need to look at this once a day. Look at it during your lunch hour at work. You can actually look at it on your phone. You need to figure out some way that, hey, man, I got to look at this once per day to kind of figure out how my hedge is doing, right? Because this looks bad. Now it says I'm down 84,000. Again, this doesn't take into account what happens with volatility going up. So let's put that back to 20. See how we're doing now. 20% move down. So 20% move down, I'm up 8,000 to 40,000. Is that great? Oh, heck yeah. Plus, I am about to harvest 6 short puts in the Black Swan hedge. Now, you remember yesterday, this was, the mark was at 20. Now, I'm going to show you something that's kind of cool, and this will, I think this will help you. So now it's at 25. So what does that tell me? Well, that tells me that the market must have either gone down. Well, let's see, did the market go down in it? No. Or what? Someone get this. This is the question of the day. So wait a minute. If price of ES didn't go down to make that option more expensive, what happened? When y'all start learning this stuff, and you can do this in the back of your head, someone there in chat. Theta decay, okay. Theta decay. How about this? Here's what I'm thinking. I'm thinking that the VIX must have gone up. Wait a minute, Bobby, that doesn't make sense. On a day when ES and SPX are up, doesn't the VIX supposed to go down? Normally, right? But the VIX went up today with the market going up. It does happen. What does Tasty Trade say? Maybe 20 to 30% of the time, that's what happens. And it's also a tail. It's also a tail. Now, let me tell you what kind of a tail that it is, in my opinion. When I see the market up and I see volatility up on the same day, that tells me something. That tells me that the options prices are swelling a bit, and that we probably are going to see a down movement in the next day or two. Have y'all noticed that? I'm sure some of y'all have noticed that. And it's just one of the things you watch, you go, oh, that doesn't make sense. Volatility up today, huh? And the market's up. I wouldn't be surprised if we have a red day tomorrow or the next day. You know, I'm no Nostradamus, and God knows I get it wrong a lot of the time. We'll probably see tomorrow the market will be up. But it's kind of cool, right? When you see market up, volatility up. So would I be adding calendar spreads today? Probably not on an up move in volatility. I like doing those on down moves. When the market's up and volatility is down, that's generally, but could you? Certainly. Why? Because volatility is way down here toward the bottom, right? I mean, it can't go much lower, can it? Can it? Can it? Doesn't look like it, does it? Looks like that's kind of the floor. You know, so could you put on one today? Absolutely, you could. I normally like to do it though on days where this thing's down. So I'm not going to be putting on any calendar spreads. I'm not really going to be putting on really much of anything, I don't think. Well, let's go to our individual trades and see what we got. All right, so now we know we're up $262 for the day. All right, let's see how our individual, we've looked at the forest. This is the forest. So let's look at the trees. Any of my trees need pruning, right? So, you know, you sit here and you go, okay, this is a black swan hedge. It's down $162. It's up $27.50 today. Really nothing to do on your black swan hedges, but just to, what we do is harvest, right? That's the only thing we do. And if the Analyze tab showed me that I needed more hedges, I put on more hedges, right? Yeah, so Batman says agree. Signs point down. That's my man Ken. So Ken knows, right? So you start seeing volatility pop with the market up. There's a good chance that those options are swelling. People are buying and they're getting it ready for a little bit of down movement. We'll see if it's a self-fulfilling prophecy, if it works or not. So I got these little calendars on. Why do I have them on? Well, it gives me negative delta, which neutralizes me, and it gives me great theta. It gives me theta. So there's nothing really to do there with that one. It's down 28%. Darn. How many more days do I have in that? 24.52. Looking good. BSH 11 down $175. Okay. 111. The greatest trades on the board, y'all, right, are the 111 trades. And the cool things about these is my normal plan is to let these puppies just keep on running. You know, it's $141 up at the time. Now I could take this negative off if I wanted to, the 3 naked puts, if I wanted to get rid of some positive delta, if I needed to get rid of some positive theta, which I don't, and if you needed a Vega adjustment, but there's no reason to do that. I mean, these things are performing great, and we put these on down days. This one's up $201. Great. My other calendar is down a little bit. Great, but it's still negative theta. I don't necessarily like that, but I do like the positive Vega it gives me, especially if we're about to have a pop downwards, right? That may be predicted by the big green monster and the VIX. So here's my big old calendar right in the SPX, down $100. Dang it, you know, but you're not really concerned because look at what it gives me. It's giving me that great Vega. So I'm really not worried at all about, you know, big downturn in the market and volatility helping me. It gives me nice negative delta as well. 111 19th. Look at these deals. I mean, up $953, y'all. I got 35 days on there, up $953. Are you kidding me? Well, that's not exactly right, is it? Remember, we had the issue with the, I was wondering about that. Look, -4 plus 1. It's not a 111. We got fooled the other day, didn't we, when we put that one on? All right, this one's up $150. How many days we got in this one? 24 days. Bobby, I thought Tasty Trade says you got, I got you. I know what you're saying. Manage it 21. I hear you. I'm a gangster. 111 15th after a harvest. So it's hard to tell. That gives me negative delta, and it's just going to let that one expire 24 days. So that's a put debit spread remaining. 111 20th. Oh no, I'm down on one of these. How is that possible? Well, we still got a little time in that one, 35 days. Uh-oh. And this one, I either harvested or our thingy didn't get in there. That's why that's showing there, isn't it? Hard to know what I did since I didn't do it. Covered calls. See, this is where Rod's making all the money, right? Rod's not selling the covered calls. Man, I'm down $270 today on the covered call. I'm down $551 on the. That's okay though, right? Because why is it okay? Because I've got 250 something shares of TQQ. So I'm good here, right? Even though TQQ's up big and I'm losing big here, I'm still making bank on TQQ as an overall trade. 111 18th, up 146. The bonds, which is my TMF shares that I have, which are performing quite nicely. I'm glad I put these in. Why? How did we put these in? Well, we decided that putting these bonds in, as much as I'm not a fan of bonds, is over the long term a much better place to park cash than just cash. We saw that in the back testing that we did, right? Let's see, no less than 6 people have called asking if it's a good move to short Tesla and SPX. How about that? No less than 6, huh? Called asking if it's a good move to short Tesla and XPX. You know, I think with volatility going up and we being overbought, yeah, there's a chance that it's going to have a, you know, I'm more neutral to slightly bearish. I don't know that the big drop is coming, but sure, right? So BSH 12 complete. Is that still complete? Make sure I hit 3.5. It's down a bit. Here's another 111 performing just like 111s do. That's got 24 days. The TQQ empire. Bum, 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 bum. See, here's what I told you. I may be down on my covered calls, 280. That's okay, because I'm up 398 here. Isn't that cool how those kind of balance each other out? Now, am I missing out on some of this great gains on the TQQ that Rod's been getting? Well, yeah. But do I care? No, I don't care, because what am I going to do come Friday? I'm going to roll those covered calls out another week. I'm going to collect more premium. I'm a premium collecting junkie. That's what I'm doing, right? Selling the premium. Do I care? No, because I'm not going to let my shares get called away, even though those covered calls are in the money. Now, what if all of a sudden I'm bearish on TQs and the NASDAQ? If I get bearish on that, what am I going to do? I could let my shares be called away. Isn't that cool? So you've got options, so to speak. Here's another 111 doing what 111s do, making money. Here's another one, $157, making bank. Here's another one, $152. It's a broken record. BSH diagonal is down a little bit. BSH after harvest, we don't need to look at because I've already done the harvesting on it. So that's just all I got to do with those is let them expire in 3 days, right? And those will expire at a max loss. They just will. BSH9 after harvest, same thing. We let those expire in 24 days. BSH10 complete, up just a bit. The Frankenstein trade, which is me building a Black Swan hedge, basically buying puts on up days and selling puts on down days. You notice I've only sold 2 here. Why? Well, we hadn't had a down day, right? We just hadn't had a big down day. So I hadn't sold any. So I still can in the Frankenstein trade. How's the VIX hedge doing? About what the VIX hedge always does. It's always losing. I only get bank out of this if we need it. Unallocated. Oh, we got down here, it's unallocated. Okay, here's the shares. So I got to move those to my TQQ empire. Because we're building an empire. Hey, Bobby, I've heard the experts say you can't hold TQQQ long term. Oh, that's what we're trying to figure out. All right, so these, looks like all that, quantity 0, all that's expired stuff. TMF plus 10, I need to put that in the bonds because I bought those the other day. So we'll put those in the bonds. Okay. So now everything is allocated. Crap, we're only up $136 today, but that ain't bad, right? This ain't bad at all because we're way, since we've started this thing, we're way outperforming the S&P 500. All right, so that's kind of all I got for the day. Only other thing that I was going to maybe think about is I wanted to do an apples to apples comparison of that. What was it? Oh, heck. What is that trade? Oh no, it's going to come to me. It's going to come to me. Tom calls it the big ass, what is it? Bear trap. Okay, big ass bear trap. Now, you can do it in SPX, I guess, or MES or ES. Now, I think Tom was probably doing it in SPX. May can do it in ES. I'm going to compare apples to apples in the MES, okay? But I just want to see what it looks like here in comparison to a 111. So these things are just so much easier to build if you do them in Tastyworks. So let's go to Tastyworks and let's try to build one in the macros. See what this thing looks like. All right, Ken and I have been chatting back and forth about these things today. So y'all, I may need your help to see if I can build this thing today. So from what I understand, we're going to go like closest to like over 60 days, right? So we'll go to 66 days. And I'm going to do it in the macros. Nobody on here has done this in the macros. I just wanted to compare it because that's what I do the 111 trading. Tom King does the 111 trade in SPY because he's building a SPY empire, right? At the end of the day, whoever holds the most SPY wins. That's his opinion. So we're building the Tqqq empire. So let's see how we can look and see what this little puppy looks like. So if we put it in the micros, it was basically an at the money put debit spread that was 25 points wide. Now here's the problem. We can't do that in the ES or the MES. Why? We don't have, we can't get 25. So let's try 30, right? We'll do a 30 wide spread here. See what this looks like. Now, all right, good. So what I think, and y'all correct me if I'm wrong, is we were going to do one of these, and then we were going to do two put credit spreads that are 50 points wide. Let's make sure we do this. So now we're going to sell this one.
Or maybe 60 wide here because you're 30 apart.
Yeah, I guess we could do it that way, to kind of double it or whatever.
Yeah. What we were talking about earlier in the chat, the only thing I can find about this that makes it stand out differently from, say, the 111 is that the whole idea here is to get the short spreads, the credit spreads, to pay for the long.
Right.
That's the difference. You slide that credit spread up and down till it pays for the debit spread. And that's the only thing I can see that it is. I may be wrong in my perception, but that's.
And Ken, let's make sure too, we're doing two. The original thing Tom said is we're doing two of the credit spread as well. So now we can move these strikes down, y'all, just for the credit spread, right? So you want to make sure that this thing is paying for the debit spread that you've got at the money. So let's just move this down a little bit so we can do it. So you want to do this thing. So the farther that you can go out, of course, the safer you're making it on the credit spread. So let's just see how we can do this. So, I mean, look at this, y'all. I mean, we're going, my gosh, way out of the money, right? And we're still getting a credit. So, you want to do a 50 cent or $1 credit. I don't know. Good Lord. Come on, change, man. Change. How far down do you want to go? Let's say we can go in for $1, $1.25. Or you could do it just for a break even or slight debit. But we want to do it for credit, right? We want to have a little credit so that this pays for the debit spread that we bought near the money. Now let's see if I can hide my positions. Let's see if I
Also, so I guess it's Sohain. I don't remember. I don't want to insult him by mispronouncing his name, but he added a twist of collecting a small credit to go long an option to enhance this, and that's a pretty good idea.
I like the idea. So what he basically said is, hey, how about this? Now, when you get it down to where this thing pays for itself, now add one more contract here, right? One more short here, and then use the proceeds to go way out of the money and buy you a long put. Now, cool thing is, we put so many of these in on this particular platform, Tastyworks. I'm not sure we can model it. So let's model this first, and then we'll try to see what we can do with the other. But this is kind of cool. So here is this trade. So let's see if we can do, see what this looks like. Okay, let's see what we got. So I've hid my positions. Let me scale. I still can't figure out how to scale in on this thing. Let's see. Okay, here we go. All right, so we got a little mountain at the end, right? Kind of cool. So what this does is if we collect $1.25 credit, then check it out. We make money anywhere that this thing goes up. Is this showing my position? See, I'm wary of what I'm seeing here. Let's see. And then these two here. So basically what this is they calling it a bear trap. So in other words, when price goes downward here, we've got this little built up, area of profit. Why don't we try to model this on Thinkorswim? And then Ken, let's try to add the stuff, the extra little bells and whistles to it. So I'll prove this off to the side. Let's see if we can't get this modeled in our little majig here. All right, so we're going to 66 days, going over 60, right? And then we're going to do the, I only did it 20 points wide there. Let me make that 30. So that's 115. If I did it 30 points wide, drag it. Come in, little fella. Oh, well. I'll just do it over here. So y'all certainly just kind of double check me on my stuff. Make sure we're doing this right, okay? Because this is a new trade. And I don't know if we need it. I want to compare it to the 111. I want to see how this thing goes. All right, so we're going to buy a 20 to 30 point wide debit spring. So we're going to go 60 to 40, you know, because they did it in the SPX, I guess, and it was what, Beth? Okay. Hey, give me a yoo-hoo if you could. Okay. Yeah, that's fine. Yoo-hoo, something bad. I did good today, y'all. I had salmon. I had a plain baked potato, no butter, no sour cream. And I put A1 sauce on the baked potato, which is really good. All right, so there's a 30-point wide spread that would cost us $9.25. So then it looked like we were going to sell a 60-point wide because we wanted to double the width of this. So we were going to do a 40-70, 40-10. 40-70. That's so cool. You can get all the way down here. Look at this. 40-70. So we're going to sell that one. And then we're going to 40-70, 40-10. So we're going to buy that one. We're going to hold your control key down. All right. Then we need to make this thing. We're going to make this custom. So we change these. This one, where we're going to do 2 contracts here. There we go. Now, what's going on here? Wait a minute. 225 debit. How did I fix it up for credit on the other one? Hold on a second. Let me think about it. So I've got to come in closer on the credit springs. Okay. So let's move this 40-80, 40-20. Let's see how that 40-80, 40-20. Here's your penny. All right, so we're going to move it a little bit closer to get the credit. 40-80, 40-90. Here's your honey. What am I doing? That's 60 points, right? So I got to go closer to the money. So I got to go maybe 4,100, maybe 4,120. Y'all help me with my math. So if I'm doing 4,120, that sounds right. So if that's 4,120 and I got to go 60, that's what? 20 and 40, 60, 40, 60. How about that? That's 60 point wide. Right? So that's a 50-cent debit. We're getting closer. Going 41.40. 60 would be 40.80. We just want to make sure we get a credit on this thing. Ta-da! There we go. So let's break even to a little bit. Let's move it up one more to make sure. So we'll go 41.50, a little closer to the money, 49. How about that? How about that? All right, let's look at this thing. So we're going to analyze the trade. Let's see what this looks like. So go to the Analyze tab, and now we want to go one expiration. We want to hide positions. We want to show only the simulation. So we don't want portfolio, but we want single symbol. I probably confuse y'all the more I play with this thing. I've done it for so long, it's just a natural thing to me. So that it is. So let's take this off and make sure this again goes flat, and it does. Let's put it back so we can look at it. Ta-da! Here's our little structure. What does it look like? To me, it looks just like a condor that is vaguely familiar, if you'll remember when we were doing the space trip trade. The only difference between this and space trip trade is the space trip trade, this little tent area, this little submarine area is pushed way back, right? So this is what we get here. So let's see what we got here. So this one, as long as the market goes up, we're going to make $3.75. So you can't lose money. And then if it goes down, then you can, as long as it doesn't go down past, what is that line? That's my 5% down line. That's kind of cool, right? That it 5% down line. That's my 10% down line. So look, it protects you pretty much down to 10% moves. So let's look at this. So this is kind of cool.
Bobby, you're going to need to reset your expiration and reset slices.
Oh, did I do something wrong? What did I do?
Well, go up here to the top where it says 10, 30, 21. and put down the expiration plus 1 day.
There we go. Oh, put expiration plus 1 day.
Yeah.
When is the expiration?
Well, isn't this, I don't know. Because I don't see the trade, so I can't figure out what just put it at the end of November.
In November.
Yeah, because you probably did it November. Yeah, like for 30th would be good. November. Yeah.
Yeah, November 30th. Right? November.
And then
30th.
down there,
November 30th.
yeah, and then reset your stuff. Oh, you can leave that for today. Down here, down below.
Okay.
You can leave that for today.
Gotcha.
You see what it is? It figures out the black shoulder models and where time, where T, where the time is up is based off that one. So if you reset your slices, you got to reset not your slices, but it says here position and simulation trades. Go over to the far right and hit reset.
Right over here.
Yeah, and that'll reset the math, the parameters that'll figure out. You'll see these first standard deviations should move, and they didn't, so it makes me look bad. But that gives you a better idea of where the expected move will be.
Yeah, I see the expected move here. Yeah, absolutely.
Yeah,
absolutely.
And that gives you a better clue. It just the math is right when you look at the slices. Okay, it's a pain in the butt. It should be done automatically, but.
And so when we're doing this trade, this is the thing that we were talking about, that this profit looks really, really good, right? Of $153 on. Now, keep in mind that the ones that were shown were done on SPX or the ES, so this is slightly different. So the micro is much smaller trade. So your maximum profit within this $153 would come at expiration. So the idea of it is that we were going to add something to this. So the neat thing is this, right? To now change this. So let's look at this. This is maximum of $153. So what happens if you now sold 3 of these? Okay, so 3 of those. Now, then let's move this. So now you're getting a 575 credit. All right, so now let's look at that. So if you sold 3 of those, then you're going to make $28 as long as it goes up or stays the same. If it comes down, and again, remember this is where we move. What's this little T0 line? This is T0. This is today. What happens as time goes on. You need a little time to go on, and you want that little thing to go up and go into the profit tent. Everybody sees the little line raising up, right? It's kind of cool. Let's go back to the day. I want to show you this now. And then here was the other piece that, gosh, I can't remember who proposed this in our chat. Let's give credit where credit is due. Who did this? Sohail, right? Sohail, was it Sohail that did this? I think, yes. Sohail. So let's look at it. And what he said do is now take that $5.75 credit and buy an option. Let's see what that looks like. So now we've got 3 of those. So now let's buy an option. I'm going to delete this. So if I've got $5.75 to spend, where can I go buy me an option for $5.75? 75. So that really you're putting this trade on for 0, or you can do the 550 and do it for a quarter credit. Let's try that. Let's do the 550. Let's buy this 550 and see what it looks like. So we're going to buy that. We're going to right click because we use the proceeds of the sale of the credit on that other trade, right? So now we want to analyze the trade. Now let's see what this thing looks like. So let's make sure we got all in here. So now we've got, there we go. So we've got the debit spread. We've got 3 here and the single there. So let's see what this looks like. Let's see what this looks like. So now this gives us $147, and we're back to the 375 there. Now let's take this little puppy off. So that allows that to be larger, right? So, let's just look at it. I want to look at this thing a minute. Figure out where everything's at. So, what does this give me? What does this give me? It gives me this. I'm just looking. I want to see. So right here, past the 10% line of the 4109. Let's see if that's price is exactly right. 4109. that's where you could have this, you know, big loss of $752. It doesn't sound that bad. And that's a defined loss too, right? So it's a defined loss. So let's just look at it. We've got 147 possible max product, max profit. We got 250 there. Now I just want to look at the Greeks a minute. So this gives me a little bit of positive delta. It gives me, don't worry about gamma, a little bit of negative theta and a little bit of negative theta. I'm just looking, y'all. I'm going to keep in mind $29 buying effect. All right, let's do a 111, see what it looks like. Because a 111 is basically trying to do the same thing for us, right? And y'all may be confused as I am at this point, but let's try it again. So here's what we would do. We go to MES. Now on the MES, we've been putting those on nearest 45 days, right? So let's go 52. Then we go and we do a long put vertical. God, I've already forgot how to do these. 50 points wide. There's 50 points wide. We move the strikes down so that we can do this trade for a $10 debit. So let's move those down. Get that down to $10. 10.25. There you go. Then we sell the put that we can sell for $20. Okay, so that'll be the 49. All right, so now let's model this little puppy. So now let's look at this trade. So now let's go trade. We're going to do 52 days. Probably should keep them in the same expiration, but I'm going to do it like I would normally do this trade. Not MES, but MES, not that. 52 days. Where were my strikes? 44.80. In this code that we're kind of doing a little research together here, trying to figure out which one was like that. Buy that one. We're going to sell the 44.30. 30. Ta-da! So that's a $10 debit. So now we got to sell the one that gives us a $20 credit so we can pay for the overall thing. See, what I really like about this trade is we're putting it on for a pretty good size, credit, right? So here's the 20 that'll pay for it. Ta-da! So now let's go and let's look at this one. Let's analyze this trade, Bob. Oh, Bobby, Bob, Bob. Look at there. There's both of them together. Just put them both on. All right, let's see what we're going to do here. We got two series here. So we got the 11331. Oh my God, I'm all confused. And then we got this. Okay, so let's take this one off. This custom off, and let's do this single off. Now then, that should leave us with this little kabonky bonky right here. Ta-da! All right. So here's what I like about this one. Look, even if the market goes down here at expiration, I'm still going to make 52 bucks, right? Because I'm putting this one on for a much greater credit. The other one is, credit to break even. And then I get a little profit target of 302 here. Again, here's that 10% down move, right? So it looks like the protection of this one or the profit tent goes down farther. The only problem is that, no, dude, it's not undefined risk because theoretically this can only go to zero, but we'll call it undefined risk because this thing really drops off. But I like this, right? I like this. I like this is higher. I like this. Does this bother me? Well, no, because I have something called black swan hedge that starts to pick it up as this thing goes down. So, I'm sitting there thinking, do I like one? When you're at the optometrist, 1 or 2? 1, 2. Let's say 2 without the little. That's with 3 contracts, though, which is not what we're typically doing. Let me do 2 and 2. Let's look at this. So this is the thing as normally done. So here's what this thing does. So I do have a little bit there. That seemed not what it was before. Got in here. Oh, Bob, you got to take that off, you dude butt. You do butt. There you go, crazy fool. Now let's see if I take that off. That should be flat. There we go. I need something with me. Now let's look at this thing. That's interesting. 95 possible profit there. If I go up, only make that much, and then see, we get a larger break even on the 111. So this break even, just remember this, is at the 4222, 4222. So let's go get the break even on the other one. 4222. What's our break even on this one? Is the even, and the break even is here. See that? The 4, so the 222, you get a much lower break even, which is more advantageous to us. Of the 4029, get a larger maximum profit here. You get a larger, because the credit was greater here for this, let me go look at the other one built up the souped up way. And I'm talking to myself a lot there now. Just follow along for a second. So then if I go this one to 3.3 to do the souped up version, that 3, use that money to buy that one. So now we want to see what this looks like and that looks like. Let's look at this. $77 there. With the money, you're making $44 up here. You're making, 40, and that break even again is at the 42.76. To me, this is just my, and I can do a lot more playing with this and trying to figure it out. But to me, I'm like, I don't think I need this. So here's 10% down. 10% down, I'm going to be down $95 or $262. Keep that in mind. Today, if it goes down, I'm down that $95. If it expires here, I'm down $263. But the risk is, it's defined pretty much to the downside. Now, let's put that off. And that off and that off. And let's go put our little 111 back on. We'll shoot. 10% down. 10% down. I'm down $412. You moron. Yeah, but look at expiration. I'm up $302. I just like this better. I think I just like it better. I think that's my decision. Hey, y'all do it. Y'all do the big arse, down trade, whatever you want to. I think you're fine. And y'all can probably poke holes in the way I just evaluated it. But if I'm looking at both of them, and particularly putting them in on the MES, I kind of like the condor we've already construed. I don't think I need a big arse fair trade. I don't think I do. I think I like what I have already. And one more time. Looking at this.
Are you saying you like the 111 or you like the bear trap?
I like the 111 better.
Okay, I'm still with you there in that camp.
Yeah, I think
it's so flexible. It's like a Swiss Army knife. I mean, you can do so much with it.
And I think that's exactly right. I mean, I can adjust. I can, take off that short naked one anytime I want to. I mean,
and you could turn it into a condor with a long foot. Yeah. If you get scared, if you get a little spooked in the market.
Absolutely, you could, right? You could add something to the downside to define your risk. Yeah, I just if I'm looking at both of them, I'm going, why complicate it even further? Mm-hmm. Well, we've got our rules. Let's stick with them. And two, I'm not talking y'all out of the trade. I'm just saying for me, I've seen too much good with this 111, y'all. I mean, this 111 is killing it. How do I know that? Well, let's see. Take the groups off. You know, a lot of this you're going to say, oh, Bobby, that's when you were selling the, you know, the micro put every day. But look, $5,829 profit year to date. Well, a lot of that's been coming lately from these 111 trades. And the really good thing is I hadn't had to adjust any of them. I just put them on a down day and let them roll, baby. So I think in my book and Ken's book, we'll just kind of stick and say, you know, if y'all want to do the big R's, bear do it. I got no problem. I mean, put whatever, you know, I'm not saying I'll never do it. I'm just saying I don't know. I don't think I need it. Does that make sense? I don't think that it's necessary. So rather than overcomplicate what I'm doing, I think I'm just going to keep what I'm doing as what I'm doing. So what are we doing? Let's go back to the drawing board. Because we always need to remember, what are we doing? Okay, so what do we do? If you are not grateful for what you have, chances are you won't be grateful if you have twice as much. Bobby Gaines. All right, so let's do this. Let's say, what's our plan? All right, first thing you do, God, I had this somewhere. Let me go find it. Because I can't remember our plan. We've got our plan. We do need to add a couple of extra things to it. Let's see if I can find it. A picture of it. Let's see. Come on, Bob. Let's do quote there. Didn't I post it somewhere as a little picture? Oh my God, it was the greatest thing since sliced bread. Hey, give me a second. I'm gonna find it on my phone. I knew I took a picture of it here. Just bear with me a second. Gosh, now that I'm taking things, I'm going to make Jack Daniel's sauce like they do it TGI Fridays, and I've got all these. Oh, here it is. This is the Hold My Yoo-Hoo plan, the Sweet Butts plan. Let's put it in the writing so we'll know what we're doing. Y'all snap a copy of that, Sweet Butts. Or we can call it Hold My Yoo-Hoo, whatever you want to do, Sweet Butts. The Sweet Bobby Ultimate Tqqq Trading Strategy. That's what that stands for. So let's put it down in writing so we all know what we do, so we can follow the things. Okay, choose you an allocation of Tqqq and we finally decided that TMF is better than cash. So we've got us two little deals, two little ETFs in there. Now I started this one 80-20. Now y'all, there's some risk to doing that. If y'all are not hedging, that is risky, y'all. That is really, really risky. So if you want to take less risk, you know, you got to choose your risk tolerance level. To me, I'm a risky son of a gun. So I would probably say for y'all to do 50-50, right? You do 50 TQs and 50% of your portfolio here. And you're only going to use 80% of your portfolio, right? Really? Or 80 to 90% of your portfolio. You need to leave some cash in there. See, so that's what I would do. Leave a little bit of cash. Is everybody with me on that? And why is the cash? Because we're going to convert that into additional shares of TQQ when TQQ goes down. So leave a little thing. So here's what I'd probably do. If I were going to do the 80-20, I would do, I don't know, 70% TQs. I'd probably do 10% or 15 or 20, or let's see, yeah, I'd probably do 10 to 15% of the TMF and do the remainder in cash. All right, so you've got a little bit of cash buffer. All right, so that's kind of a good thing. So let's see what else we said here. Use the AIM algorithm. Use AIM to tell you when to buy and sell additional shares. Now keep in mind, here's where you can't panic. Here's where we can't puke. Your algorithm that is in the spreadsheet that I've shared under the AIM thing, there's a link there. You use that spreadsheet. I can help you get set up if you need some one-on-one time, but it'll tell you when to buy and sell. So we're going to use AIM. LaCello. If you hadn't read his book, now's as good a time as ever. Get it on Amazon. All right, so we got that. What's our other part of our plan? So we're going to use the Black Swan hedge from Ron Bertino. We talk about that all the time. Y'all saw me test it today, right? We're also going to increase our cash by selling some covered calls. Now, this is kind of a hedge of itself, right? So you're selling covered calls on your shares of Tqqq. Okay, so I got 255 shares, so I can sell two calls. Collect me some free and easy cash. Bobby, that's limiting your upside. Hey, whatever. All right, don't sell covered calls if you don't want to. All right, so then we're going to use the big green monster, BGN, to tell us oversold, fair value, and overbought conditions, right? All right. We're going to use Option Alpha's VIX hedge. Use the VIX hedge to hedge our downside as well, because we are hedge fund managers. That's what we do. We're going to, so we talked about Blake Young's big green monster. He doesn't call it that, I do. So the next thing is we're going to use a skew driver to tell us when a potentially large down move in the market is going to happen. So we're using the skew driver. 8, is it 9? Oh, we're going to use the 111 trade. So we'll use that as 8. 111 trade. When do we put those on? We put those on down days, right? So that's going to provide us protection during a slow grind down level, which is really, really good. Also, one thing that we hadn't really looked at, but it's not even close now, is we're going to look at the 200-day simple moving average on SPY to kind of give us a trigger as to whether we should be in TQs at all. So right now, if you were to look at the 200-day simple moving average on SPY, we are well above that. So we are in. There was a study, and I will share that with y'all at some point if I've not done it already, that showed you were more inclined to have super losses if you were holding the TQs under the 200-day simple moving average on SPY. So if we ever get our 200 period moving average below, the price of SPY below that, then we need to start saying, okay, Mayday a little bit. You need to peel some off, right? You need to convert some of that to cash or convert some of that to TMF, which is probably the better thing to do. We will now rebalance annually I'm going to put 2 other things that I wrote on here since we come up with the 10 rules. We can use futures to neutralize deltas if we need to. We can buy and sell futures. Remember when we went over that the other day? Of selling a mini NASDAQ future, gave us what, 75 almost deltas, positive or negative. So we can use that if there's a collapse and we go to war with China. We can short the futures, right? The other thing that we can do on our shares of TQQ, if we need to go into the bomb shelter, is the collar. We can put on a protective collar. What is a protective collar? Well, it's selling calls above the price of TQQ and buying puts below the price of TQQ, right? So that we have effectively limited our upside, but we have also limited our downside. I think it looks like this. Remember I tried to show y'all the other day? So if you're buying stock, right? So here's, you got your little risk graph of stock. Here's the stock risk graph, right? It looks like this. Oh crap, that goes straight down. Y'all know what I'm saying. It's diagonal, right? So unlimited profits this way. And then you got, unlimited losses this way down to 0. What a collar does this. A collar limits your upside, but it also limits your downside. Limits the downside. Instead of keep going down to 0, it limits it to an amount. So by saying, the price of whatever underlying that we're doing is 100, well, all you got to do, if you need to freeze frame, what do? We could sell the 101 call, right? We sell that, and then we buy maybe the 99 put. So it basically freezes your shares So that, you know, if you need to go to the bomb shelter, hey man, I'm going on vacation, I'm going to Aruba, Jamaica, ooh, I want to take you and all that, whatever, you know, and you say, I can't watch it. Hey, that is no problem. Guess what you do? Why don't you just sell your call above, buy you a put below, and have that thing, you know, going through the expiration, you know, past your vacation. Isn't that cool? So that you don't, you know, risk anything to the downside. You got your call sold on the upside. It's kind of a cool little thing. Just kind of say, let's freeze it. Let's freeze my asset. Let's protect it. So really, really nice way to do that. Okay, what's the chat going on? I may have kept y'all long. Okay, Jose had to hit out a little early as well. Maybe change it to sweet butts. Bobby's ultimate trading strategy. Until the two at T's, yeah. Yeah, maybe Bobby's ultimate. Yeah, we can do that. Sweet butts. Batman, Ken had to go help the missus unload groceries, so I always try to act busy. Death is. We finally got that new refrigerator, and we hadn't barely brought groceries and still eating out all the time. But y'all, this is a great strategy. It's a great strategy. Now, it's not going to be shiny enough for some of y'all like Matt. Matt's the gambler down there. So Matt may be like, he says, I need something shiny. That's fine. So what do? Well, you allocate 5 to 10% of your strategy of your net leg to fun stuff, fun shiny stuff, to keep you from doing everything crazy, right? And losing your whole account. So let's say you want to buy the Donald Trump SPAC. How's that thing doing today? I thought about buying a call. I really did. It was down 11% yesterday. See how it's doing today. How's that thing doing? Was it DWAC or something? Let's see, DWAC. DWAC. That thing is down 20% today. Glad I didn't buy a call. I should have bought a put. So if you want to take a small amount of your money, you know, 5 to 10%, have fun. You know, YOLO and NOLO and FOMO and all that kind of fun stuff. All right. Well, it's been a great day today. Hey, we got a Tom Peterson in here today, which is good today. So I hope y'all enjoyed it today. Tell your friends and family, hop on in, and we'll keep trading. And I think we're on to something really, 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 really good here. And I'll see y'all tomorrow.